Hi, welcome to my channel. For those of you new, my name is Dave and I work in financial services. And these videos are a mixing journey towards financial freedom, financial well-being, so you, like me, can reach your goals in the future. Now, I applied these principles to become a millionaire in my early 50s. Now, it's not to boast or brag or say, look at me, but to give people hope. If I can build a side profile over 6 figures, so can you too. If you think long term, invest on a regular basis in a tax forever. So let's look at the latest video. Now, this video is about my stock and shares ICE review for June 2026. So what are the aims? Well, annual growth 10%, annual dividends this year of £6,000 and a year-end value of £215,000. So how have we done the month? Well, a very good month. We started at 203,915. We finished at 212,041. Increased the month of just over £8,000. Year to date, 14.56%. So well above expectations. Quick look at the graphic. We put £823 in. Year to date, nearly £6,500. Now we put ad hoc amounts as and when, and normally top up automated on the first month. Our platform providers charges fees based upon the portfolio value, slightly increased to £23.02. So where are we actually invested? Well, at the moment, UK and Europe, nearly 57%. USA and Americas, 34%. Asia and emerging markets, 9%. Now we are putting new funds, shall we say, in our funds, shall we say, away from the UK, but any dividends we receive is normally reinvested in the UK stocks. Now, let's look at what we received dividends during the month. Very good dividends a month. For the month, we received £1,088.20. Now, across our shares, we've got a yield of 4.74%. Now, so where do we receive dividends? Well, Legal & General gave us nearly £1,000. Got a yield of about 8.9%. 364 new shares, so it will increase our next payment. AJ Bell, the platform provider, gave us nearly £50, so again, 8 new shares, what we see as a growth company. And HSBC gives a quarter dividend of £43, reinvested 2 new shares, but it does pay a nice quarter dividend. So year to date, we expected 3,000, we're at 3,924, so well above expectations, but we will have good months and bad months. But so we say, £1,000 a month is very good money, and it's all reinvested in the portfolio to increase future dividends over future years. Let's look at actually what's in the portfolio. Now, they're my own personal selections. We sold no reason to sell any shares in the short term. Now, we own 50% in funds, 7 funds, 5 in profit, 2 in loss. Total fund value is £112,000. So, our largest fund is a Fidelity World Index fund. Just switch off. Very low fees, 0.12%. Does pay a small dividend, but annual growth last few years over 10%. And year to date, or the last 12 months, we're up 26%. We own £37,500. Nearly 80% of our portfolio, but it just switch off. Very little risk, does what it said to do. And we did top up that month, £400 a month into that portfolio, that fund. We own a passive ventures fund with our platform provider AJ Bell. £31,000, again, very low fees, 50 portfolio, but it was done for diversification. So we say it covers global funds. Now, we own an LNG technology fund, somewhat selective, £28,000, 30 portfolio, slightly higher fees, around about 0.3%, but past 12 months, it's up 50%. And again, we did top up £350 a month, shall we say. Now, 2 funds have struggled. Fidelity China Fund, we put £3,000 in, it's now worth 2,647, but it makes up 1% of our portfolio. Has struggled, keeps saying it's going to be back in profit, but China's been there for a number of years, but we've done it for a reason. So we're in a Russia fund, we put £500 in, went up to £600 plus, and then struggled ever since because of the Russia-Ukraine conflict. Now we were back in profit, we were going to sell it, reinvest the funds, but there's obviously a transfer embargo or a buying center embargo, so we cannot leave the funds. It's now showing a small loss of £482, But thankfully it makes up 0.23 portfolio. It just goes to show you're not going to get every decision right. Now we did put some money away to ring fence for specific purpose. We didn't want to aggregate existing funds. So we put £3,000 in S&P 500 fund. It's now worth 4250. Done for the variation, but it's cheaper than portfolio. And we put £6,000 in an FT All World Index fund. It's now worth £7,500, 3.5% of portfolio. So apart from Russia and China, every fund's in profit. But we've done it for a reason: diversification, low fees, shall we say. Just switch off. They give them 10% a year, every year, but it was done because we were, shall we say, solely UK focused. Now, if you like the videos, smash the like button, subscribe to the channel. Now let's look at the shares we hold within the portfolio. At the moment we own 10 shares, all in profit, none in loss. 47% of the portfolio, just over £100,000, of which 43% in the FTSE 100, 4% in the FTSE 250. Now, what we call long-term buyers or big name players, we show no reason to sell any shares for the foreseeable future. Now, our largest holder is Lloyds Banking Group, 21,500 shares, £24,000, 11 portfolio. Very good results out recently, paid a nice dividend. It, shall we say, improved lately and is finally over £1 mark. But who knows what in the future with interest rates. But very cash rich, affected, shall we say, by the car bank scandal or the repayment redress scheme. Now, we own L&G, Legal & General, 6,719 shares, nearly £20,000, 9% portfolio, and as we found the month, a yield of 8%, it gave us £1,000 in new dividends reinvested. We own Aviva, just over 2,000 shares, £13,000, again a nice yield around about 6-7%, makes up 6% of the portfolio, but very cash rich. On a buying spree, has, shall we say, been given good dividends, good share backs, so the price has gone up recent months, but a very attractive company. We own NatWest, 1,332 shares, nearly £9,000, 4% of the portfolio. Has struggled, shall we say, past few years, but the last 12 months, the shackles are off. It's one of the best performing shares out there because it's no longer in the government. It's got a free reign, it can pay dividends, but again, in a very good sector, the banking sector. Now, we own Barclays, 1,722 shares, again, nearly £9,000, 4% of the portfolio. Smaller yield, around about 3.4%, but again, just like the banking sector, very cash rich. So I would say making a very nice profit. Okay. We own HSBC, 577 shares, £8,000, nearly 4% of the portfolio. As we found out the month, a nice quarter dividend, but we've done it, shall we say, away from UK banks. Has a great run lately, shall we say, very nice results, very nice trading, very nice profits. Now, away from the banks, we own AJ Bell, the platform provider. Everyone seems to be investing. We've done it as a growth company. We own 999 shares, £6,100, nearly 3% of the portfolio. It's seen as a growth company. Assets are improving, clients are improving, shall we say, through the platform, through advisors. Very cash rich, growth orientated. Okay, but it does pay a small yield. Now, and that'll pay a nice dividend in the started life. We own Standard Life, the pension provider. Now, it's bought up numerous companies. Maybe, shall we say, it's Phoenix Life, Reassure examples. 716 shares, £6,000, 2.8% portfolio, but a very nice yield of 9%. And it's what we deal with pension and work. Now, away from the banks, we own Sainsbury's, the retailer. 965 shares, £3,100, 1.5% portfolio. It's forever in a price war, shall we say, with Aldi. Everyone needs food, but it is affected by cost of living crisis, so we see food inflation. But it will pay nice dividends in the middle of July, a yield around about 3%. And then finally, we own Card Factory, 4,187 shares, £2,800, 1.3% portfolio. Has struggled the high street, but it's very cash rich. Dividends increased, and again, will pay a nice dividend at the start of July. Okay, got a nice yield. But it has struggled online business, shall we say, which is trying to improve. Has struggled, shall we say, minimum wage, cost inflation. But it is expanding the high street. Okay, is opening new stores. So, Just go to show you're not going to be able to, but we are in profit on our shares. And as we found out, we got some nice dividends, £1,000 a month. Now the aim is just to switch off, reinvestment basis, but to give people hope. If you think long term, invest on a regular basis, get into the habit of automated savings and reinvestment dividends, you can create a sizable portfolio. If you like videos, smack the like button, look at my blog, shall we say, moneyminted.co.uk, and we'll see you again in the next video.